Hi Forex trader, welcome to the weekly recap of Admiral Markets, where I take a look at the euro dollar, pound dollar, dollar yen, and AUDUSD. First of all though, be aware that this video is intended for a global audience and may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more info on that. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this video is for educational and informational purposes only. By continuing watching this video, you agree with this disclaimer. Alright, first pair on the list is the pound dollar. Looking at the 4-hour chart, I saw personally a bounce at the 61.8 Fibonacci retracement level, and what I'm looking for is either a retracement deeper down to the 78.6, where there's a confluence of a support trend line coming in. That could be an interesting spot for a long this week if we get the correction downwards. If not, then this bottom might hold at 154.60. I would be zooming into the lower time frame, seeing if I could see price accelerate past this resistance, which it really hasn't done as yet. It tried Friday, or actually earlier this morning on Monday, to push through, but failed so far. So if pushed through, this resistance would still mark perhaps the start of this upward rally. 155.25, 155.50 for a retest of 156.50-ish. So that's something that I'm keeping an eye on, this resistance. But also, if price can break through the bottom here, the space down to 154, that means below 154.60 down to perhaps 154. So that could mean retracement here, further retracement to the downside right there between the 61.8 and the 78.6. Or if price breaks above the resistance, the potential for a rally to retest this top. And if it breaks that top, then I would look for continuation to the target, which at this moment is 157.50 at this moment. All right, that's the target, the main target of a rally. When I look at the market heat map of Admiral Markets, and that's, you can find that on the website, basically just going to the website and clicking on analytics, and then you find it, market heat map. It shows very clearly which currency pairs have moved a lot and what is their volatility. And you can see the pound dollar not as interesting at the moment, but the AUDUSD actually in a better position. A lot more movement and volatility, and relatively on the higher side of the pack. Now, of course, the better ones are all the way here, actually, with the pound AUD, for instance, perhaps being the most interesting one. But the AUDUSD coming in as an interesting number one compared to the majors. So let's take a look at that AUDUSD. Alright, this is the 4-hour chart, and you can see last week price did retest this resistance, and it was still a good downside like discussed in the video recap, and pretty good follow through with an impressive break of the 73.50 level here, I think it is, and pushing through with good candles. Now, I would not be surprised looking at a couple of bullish candles that I already see forming and not breaking this low, if price were to make a retracement back to the broken level for further downside. So looking for shorts anywhere at that 50 fib probably. If I take the last swing high, swing low, right there would be an interesting level, I think, to look for shorts. That's what I would be doing, keeping an eye on this zone basically right in here at these fibs for a turnaround, for more downside. And the target in that case, pretty straightforward, looking at the -272 and the -61.8 target at the quite, a conservative target, I would say, if price does continue. And from an Aussie point of view, in the long term, when we're looking at the weekly and daily chart, you can see that this is a pretty good, strong momentum, pretty good downtrend at the moment. So it could push even further, that maybe retest the 70 round level, in fact. But for the moment, that -272 target at 72.20, I think a decent target for a turnaround. Now, if price were to break above this resistance, obviously things are looking a lot different. If it manages to push above 73.80, and in fact probably more important 74.17, this top, then it's not as bearish as I am thinking now or analyzing, and we could maybe see a some kind of recovery rally, but not expecting that necessarily this week, looking at the downtrend. Next on the list is the dollar yen and the euro dollar. But first of all, though, be aware of these webinars. Nanda is going to take a look at his weekly FX recap. EU, GU, and AU, among others, and his expert opinion on trailing stop EA. That's on Wednesday. Tuesday and Wednesday, I take a look at moving averages and intraday and interweek strategy. And Thursday, together, we take a look at trend concepts and how they help in catching the big run. So I hope to see you in one of these webinars this week. All right, back to the charts. Dollar yen made an impressive rally. Was losing a bit of steam here at the very end, making kind of a rising wedge. Broke out of the rising wedge, hooked back, and now falling again. And I would not be surprised with that momentum right in here to see price and the bottom break, of course, as well, to see price head back to the minus 61.8 target at 123. If I put a fib on the entire upside, that would correspond to the 38.2 fib. So at the moment, we're getting kind of a zigzag correction. I wouldn't be surprised, though, to see a bounce at this confluence or perhaps even deeper around here. In the long run, that could just be, or medium run perhaps, that could be kind of an ABC zigzag like this. And ultimately, considering the fact that price has been below this bottom for so long, I'm expecting a bigger correction. And I would think that this is a big resistance zone right in here for more downside to test these supports. That's what I'm thinking. Basically, down to support, a bounce, a failure, and then back down to test support. Something like this is ultimately what I think the path of least resistance on the dollar yen. Euro dollar, we see a couple of good bullish candles and some inside candles indicating kind of a shift of momentum, a break above these daily highs with a good strong bullish candle showing that a reversal here, kind of a rebound, is very likely at that 108 level, and that's what's happening right now. So price, I think, could easily retest one of these resistance lines that still needs to be properly tested. That's that one right there. It looks like this on the 4-hour chart. So there could be some bounce off this 110.50 level right here. All right, and we can test back to the support. And then you get into the situation where price has a strong support level and a strong resistance, and is going to break one of those two. If it breaks, it could be a bullish rally. If it breaks to the downside, a bearish retest of the bottom right in here. And so I'm interested personally in trading the bullish break or a bullish rebound off the bottom. And I will keep an eye on bearish turnarounds here and a break here. Ultimately, considering the 108 bounce, I do think that the upside has, for the moment, more potential. Unless it really breaks below 108, then in the long run, this could be a very strong bearish push through major support. That, of course, is an important level, 108. Otherwise, expecting more of an upside with the break or the bounce. All right, more of this analysis will be coming your way through the social media channels with analysis brought to you daily. And hope to see you in the webinars that we have this week, and wish you all good trading. Cheers.